once it's categorized as an asset class, we have nothing to do except position ourselves in this asset class. Either we're going to be a small position or a big position, but we cannot ignore it. We cannot not have a position. So even 1% of that multi-hundred trillion dollar funds available moves the needle on Bitcoin. It moves it up considerably. And with Bitcoin, it's kind of the end of price discovery because everything will be priced in Bitcoin eventually. Everything goes to zero against Bitcoin. And so for someone like myself who's been following this for 40 years, finance, markets, technology, Bitcoin is the holy grail. It's the end all. I would say that my compatriot in all of this would be Michael Saylor, who really, we hear Michael Saylor talk. He talks about the aesthetics of Bitcoin, the beauty of Bitcoin. And he speaks about it in a way that I think carries the torch from the Max and Stacy from 2011. He started buying it, I guess, when it was 10,000 or 12,000 or so in the 2020 era. So we were there from 2011 to 2020. I think he's kind of carried the torch from 2020 in a lot of ways and introduced Bitcoin to massive pools of capital. I'm surprised that more companies haven't followed his lead, given the outbreak in inflation that we've had, exactly as he predicted it. The melting ice cube, as he called it at that time, is exactly what happened, and I'm surprised more companies. Although I guess we could say now we are in an era where BlackRock and these other major institutions are now finally looking at Bitcoin. So his work on the institutional level, I guess, is bearing fruit now, 3 years later. And I see in the Middle East, they're starting to recognize Bitcoin. And so that's a huge pool of capital. I think all that oil money, when it finds its way to Bitcoin, will be a huge catalyst for higher prices. It's a natural way for the oil industry to diversify their portfolio and to, because Bitcoin essentially is energy, and I think energy eventually gets priced in Bitcoin, and there's a marriage between these two in a big way. So, I think that's kind of the answer. Is I've always been fascinated by price discovery in markets and kind of the architecture of markets and how markets work under the hood. And, Bitcoin is just such a, it's a pristine, perfect money. And I think it's something that humans have been searching for since forever. And now we're seeing it change society on really a fundamental level with the introduction of Bitcoin. It's a lot of people are freaking out because of it, because it destroys the status quo. And a lot of people who were kind of waiting for it to come along, who had the faith, that humanity could be saved, they see Bitcoin in those terms. So you have this split going on, which is very exciting. So it just continues on and on. How could you not be interested in it? How could you? I think the people who were into it earlier and walked away just never got it from the beginning. And once it's categorized as an asset class, we have nothing to do except position ourselves in this asset class. Either we're going to be a small position or a big position, but we cannot ignore it. We cannot not have a position. So even 1% of that multi-hundred trillion dollar funds available, moves the needle on Bitcoin. It moves it up considerably. So if you get into the 5 to 10% range, and, then you start to see it really race ahead to those very, very 7-figure type predictions that people have been making, including myself, because it is an asset class. Now, on the flip side, you have what we saw in the gold market, which is that the ability to control price discovery and manipulate prices is real through the derivatives market. So the price of gold has been lagging inflation for 20 years because the governments around the world don't like gold making their fiat money look bad. So they make it easy for huge funds to manipulate the price of gold and to scalp and to continuously skim profits off gold, which is what they do almost every day. You can watch it and see it. It's pretty clear. And they are very good at keeping the price of gold and silver down. There are something like, for every ounce of silver, there's probably 50 ounces worth of derivatives floating in the various exchanges around the world that are used to keep the price of silver down, because governments don't want gold to race ahead and to draw capital out of their fiat money scam into gold. With Bitcoin, we have the ability to pull our private keys, which is not really available in gold. Technically, people can take delivery of gold on these exchanges, but there's never been an organized attempt to do so. We tried to do it a few years ago with Crash JP Morgan Buy Silver, because after the 2008 financial crisis, when JP Morgan ended up buying Bear Stearns effectively for nothing, they inherited this huge multi-million short silver position that Bear Stearns was managing at the behest, presumably, of the government. The government likes to stay involved. And so I did some calculations, and it became clear that if this short position wasn't covered and the price of silver got to $60 or $70 an ounce, it would bankrupt JP Morgan. So we started this Crash JP Morgan Buy Silver campaign, and we got the price from 15 up to 50, which was the old a bunk, the bunker, the Hunt brothers. The Hunt brothers got it right
in the 80s.
In the 80s, into the $50 range, they were cornering silver. So we got it back up to the old Hunt brothers $50 level. And then the feds, of course, came in and they changed the laws overnight to make it possible for these banks to have and carry much greater short positions in silver. So they printed up a lot of paper silver derivatives, and they stopped the run on their bank, and the price went back to 15 or so. So we've seen that it is possible to force capitulation in the silver market, but at the end of the day, because the ability to pull private keys is not like it is with Bitcoin, I don't think it will ever succeed. Whereas with Bitcoin, you can pull your private